Sugales here with Key Credit Repair. Credit question of the day: what is a principal reduction or principal balance reduction? So, let's say you went ahead and you had a debt for $50,000, a federal student loan, okay, and you can't afford to make that payment, okay, but you've been working, in some way, shape, or form on a federal level for the government for the last 10 years. A lot of times you can apply to have a principal balance reduction on that note. So if you owe $50,000 on it, in many cases you can bring that down to, let's say, $25,000. So that principal balance is being reduced. It's not just a matter of reducing the interest rate, but what you owe overall is being reduced. And this could be applied towards anything. I've heard of mortgage loan modifications where a consumer has gotten the principal loan balance on their mortgage brought down. We've seen this done countless times with student loans, even sometimes with credit card balances. More rare, but in certain cases it has, especially through the settlement process. So thank you so much, guys. If you have any additional questions regarding how principal balance reduction is done, obviously reach out to us, keycreditrepair.com. Thanks.